looking at how growth funds are investing, that it's quite brutal for those companies right now. There's not enough money, or probably there's no money right now for companies who don't have undeniable PMF. There are very select funds in India actually, which can write growth checks. Between this on this call, it's probably 20-30% of right now growth capital. So it's very important to know how they are thinking, have relationships in those funds.
The question which I keep on asking myself more and more now is, where's the nonlinear advantage in a company coming from? There's a framework which now I've built on where is innovation in a business largely, right? I've just been playing around on how much digital footprint exists of a company, which the founders also perhaps don't know of. Just go to archive.org, right? Like, it's a gold mine of information. You would know whether the founder was really building what they said they were building 3 years ago, all the pivots that happened along the way, even before you meet the entrepreneur.
Right now, VCs have a problem of plenty, right? There are so many different companies doing so many exciting things. It's very hard for us to prioritize. Solving the most complex problems of the enterprise will build a lot of moat for you. Because once you solve the most complex problem for the business, you get the highest context possible, right? You get the highest context possible of the enterprise, and then you become almost irreplaceable.
Some breakout companies that everybody want to work with, you have some sense that this is top 10 built and scale ventures before. Really want to get it. Overwhelming advice I'm receiving is don't talk to investors. Right? Just build your business. But there's an intuitive feeling in my head that it's always best to build relationships quite early on. That lot of the jump of faith that you'll have to take happens on that relationships or having known somebody for a period of time. Guys, finally, thanks a lot for making time on a Saturday evening. Welcome to episode 3 of Moonshot Projects. Last time I kind of understood I didn't introduce my guest. So slowly learning podcasting as well. So this time around, I'll do that. Yeah, so we started off last podcast by helping seed stage founders think about their first check raise. We had 3 founders who has raised amazing seed rounds, talk about how they did that. And there was a lot more question about when you're doing something on growth, especially in AI. So I thought, been speaking to all of you, I know you guys have spent a lot of time thinking about growth investments and spaces and deal space in India. So the idea was to put together a panel where we talk to founders who might be raising their growth rounds 12 to 18 months from now. And we'll probably do 3 things with this episode. Number one, I'd love to give you a little bit of flavor about, all of you on how you think, how you represent your fund and how you think about investing. I've learned quite a bit and it'll be helpful for the founders to know how you guys think first principle. Number 2 was to understand really where India is in their AI journey and what leverage does Indian founders building out of the world have. All of you have seen deals across the globe and markets and have a fair sense on, what's working for us and what should we focus on, right? Number 3 is usually when founders raise, the thought process is, hey, I'm doing well. My company is doing XYZ. They're at, such and such space. But investors come from a point of view of, I've seen XYZ deal spaces. Where is my risk reward, right? So give a little bit of flavor on how, given what you've seen, what kind of themes is exciting? Why is it exciting? What is not? So that, the founders also get a gist of how you're thinking and how you are shaping your thought process. And third was a little bit about advice for founders in terms of structuring their fundraise. I mean, last podcast with founders, there are a lot of thought about don't talk to investors until you raise. And when you do talk to investors all at a small bit of time, which maybe works for early stage and it maybe works if you are in YC and you're doing a demo day exit. But maybe I believe in growth stage, you need to build relationships early on and give that trust. I would love to know how you guys would ask founders to prioritize. He can't also spend all of his or her time building that relationship as well, right? So it would be interesting to know how to think about that, when to think about all of those buckets. So those are the 4-5 areas that we'll broadly talk about. The way I would structure this is maybe we could, I'll start the podcast with congratulating Sai. Sai is a married man. He just got married last week. So congrats, Sai. I just realized maybe I was texting you between your wedding. All the best wishes from all of us. Maybe you could start with your introduction and talk a little bit about you, and then we'll move to all the guests.
Sure, no, thank you. I'm Sai. I know Anagh from before. Subham, nice to meet you. I'm a partner at Sesquan. I've been here for close to 6 years. In my prior life, I was a founder and operator building in software, food tech, and electric mobility. Looking forward to speaking and learning from this podcast.
Yeah, it's a little bit about, would love to know a little bit about, I know where SIG invests, what stage it comes at, all of those technical things, but also a little bit about how you think about investing in terms of, what do you filter, right? How do you think about tracking? Is it management team first? Do you map out areas and look at where breakout is happening? Is it more thesis, trends driven? I'm just trying to get a flavor of how you think about that bit as well.
Sure. So we as a firm believe in bottoms up investing versus top down investing. The question which I keep on asking myself more and more now is where's the nonlinear advantage in a company coming from? There's a framework which now I've built on where is innovation in a business largely on. It could be on technology, on product, on market, or on execution. And this was a framework which I would credit Yash and Akash from Sparrow, who spent hours and hours brainstorming this with me. And more than indexing on size of the market, I now index a lot more on what's the compounding in a business and will that continue to happen over a time period, which we all as investors look for. One of the other reasons why I stopped thinking about TAM was I was so colossally wrong. 9 years ago, I did market sizing for a meat delivery business. The size of the market I forecasted was the revenue of that business. And I think over the years, when companies do well, they just increase elasticity and grow the markets in a lot more ways than what we could envisage. So for me, just finding where the nonlinear advantage comes from is the question I obsess the most right now.
And when you say bottoms up, is it about meeting companies and then thinking, is there a nonlinear advantage here? Or do you go and map and
Yes.
say, probably there is nonlinear advantage if there's just spaces, let me go and meet companies in that segments and spaces?
We do some frameworks on or mental models on what works or what doesn't, but we don't make theses. Of course, a lot of firms have done tremendously well doing top-down investing, but for us, it's just meeting entrepreneurs, looking at metrics, wherever the rate of growth is very high, the second derivative is a positive number. There's definitely something I don't understand, and then that's when we start doing a lot more work. So it's a little more quantitative first, and then the qualitative aspects as opposed to the inverse.
Got it. But Sai, on that note, when a founder reaches out in order to filter to even take a call or not, would that be more just on a management team that, hey, I believe this founder is interesting, it's worth spending time and evaluating if there's a nonlinear advantage or understanding what he or she is building and then tracking them from there?
So we largely do Series A through Series C, so early to mid growth. That naturally brings down the funnel a lot more for us. So we as a firm would meet maybe 1,000 to 1,500 companies a year, and there are some sectors we don't invest in. So that allows us to have fairly decent coverage. So as long as a founder is reaching out who's raising a Series A or later, we would take that call. And perhaps today the ecosystem's still growing and not that large that we have to worry about coverage and worry about who to speak to. I know that's a problem which Anagh might be dealing with given how many early stage companies are being set up right now. But that's not a problem for us today.
Got it. No, super helpful. And how long have you spent time in Bangalore or India in general? I know you have spent time across US and Hong Kong and others.
Now, I've been in Bangalore from 2019.
Yeah.
I was in Delhi prior to that. So 2019 onwards, I've been living in Bangalore.
Awesome. No, great to have you, Sai, and great to thanks for making time.
Firstly, congratulations, Sai, on the recent wedding. But I'm great to meet both you and Anagh, for the first time properly. Of course, I've heard great things about both of you. But no, I'm happy to be here. And just to quickly introduce myself, I'm a VP at Westbridge Capital, focusing on AI and software investments. And I think how I think about investment, and just to maybe just lead on to the question which Saurav is going to ask me. So I think is that I think it's slightly different from Sai's answer. That I think at least I focus a lot on TAM initially. And I think it maybe also comes down to the fact that I'm doing like AI and software, where TAMs can get limited very fast, right? And where there's a lot more competition, where despite you achieving like substantial growth, a lot more players can come in and disrupt you at any point in time, right? Cloud is a great example of disrupting so many scaled software systems already. Versus, I think in consumer markets, fintech markets, distribution becomes a very strong moat, and like product velocity, is not really there. Right? Versus in AI SaaS, product velocity matters a lot. But that's at least for me, time matters a lot. That how big is this opportunity?
And where are you from in India, Shubham? Where have you spent most of your time in India?
So I grew up in Kolkata, spent almost 18 years there, and then went to IIT Kharagpur. So was there for 4 years. So been in West Bengal for 22 years. and then joined McKinsey, traveled a lot during that time. And then was with Westbridge. So moved to Bangalore in 2020, end of 2020. Was here for 3 years, then went to business school and then came back. So I've spent 7 months now back in Bangalore.
I forgot to mention. So, fun fact about Sai is that he spends a lot of time figuring out AI tools for VCs. He's been coding and seeing what AI leverage can do. And fun fact about Subham is that he's the first analyst at Westbridge SaaS team in 2020.
Kind of. I mean, we had done some investments before that, but
Yeah.
like
You
profit.
built a devoted team in 2020 only.
Yes, the devoted team started in 2020. So, and I was the first analyst there. So, yeah.
Got it. Awesome.
Thanks so much, Saurav. Excited to be here with Sai, Shubham, and yourself. I have been in PC for 5.5 years now, which is not what I had imagined because I joined VC as an experiment. I was an ML engineer beforehand, right after. So, in fact, Sai and I overlapped at IT Delhi. I was doing CS there, and it's like most other people in my batch ended up joining one of the tech roles after that. And I was looking to join a company as maybe a founding engineer or CTO. That was the cool thing to do. This is 2018, 19.
Why not? Why not? I thought you'd join VC as an experiment and then say I'll start up myself and use this as advantage.
Yeah, actually, that was the plan. That was the plan. Yeah, someone told me talk to VCs. They can hook you up with some portfolio founders who might be looking for a CTO. Right, and my first reaction was, "What's a VC?" That's where it started. But then when I got to know more, it sounded fascinating in terms of just the breadth you can get. So that was my plan to work there for a year and then start up. But yeah, I think credit to my first fund, Stellaris, is what I joined. This is end of 19.
And who in Stellar are you working with?
So I was again just like Shubham. I was the first analyst, actually first analyst ever for them. So I was working with everybody. They had three partners, Alok, Rahul, Ritesh, who looked at different sectors, but I was supporting all of them. And
Got it.
it's funny because most of my first year I was looking at D2C companies, which I had no idea about. But yeah, I built a crawler for Amazon and things like that. I was trying to
This is more
see.
consumer brands, I assume, not D2C, the consumer tech.
Yeah. Brands. Yeah. So that also was part of what I was doing, and everything fintech, logistics, SaaS also. But then over time, when I realized that VC is it's a lot of fun, and I could do this maybe as a career as well, then I started seriously getting into some thesis areas and went back to my natural inclination. Just look at more technical software companies, so AI and developer tools. Back then, AI was more focused, kind of computer vision companies, NLP companies. So it was still slightly fringe, though even then, as it is today, people used to throw around AI ML for everything, but still it was relatively fringe. But when I joined Accel, this is 22. I joined in August, so 3 months before ChatGPT, and my charter was to build the Gen AI thesis. Again, not many people cared that much about it. People knew this something is happening, but it was still very niche. But within 3 months, it became mainstream. And last 3 years have been, yeah, just being in the limelight, being in the mainstream, trying to figure out, scratching my head of what's happening. And today also, I don't know if I've gotten any
So,
better.
so the fun fact about Anagh is that I've been trying to see what podcast my guest has already been just to understand. I think it's trying to find podcasts about everyone. You have by far the person I found most podcast on across other podcasts and panels I have. Yeah,
I'm not sure if that's a great
and
thing
on
or a
Accel,
business thing, but
a couple of others and couple of other media threads. So it's been, I was like, okay, there's one or two I can listen, then the rest I'll have to ask AI to summarize.
maybe that's why I continued in VC. I'm a talkative guy.
Nice.
So
So
yeah.
coming to that one question, Alex, so how do you think about the investing bit that we talked about? So, Sai talked about being nonlinear and Shubham being TAM first. I'm just curious on how you think about that.
Yeah, so I think I consider myself a student of venture, right? And I try to think a lot about or read a lot about the history of venture and where people have actually had huge outcomes. And predominantly, what I've seen is if you're true to the art of venture, which is trying to back monopolies in large markets and bounded outcomes, one day something good might happen. So that is what I've tried to pursue. So I think all 100% of the investments that I've been involved with are something on the bleeding edge of technology and working in unbounded markets. With once they hit scale, initially, of course, there'll be a lot of risk because there are trade-offs everywhere. But once they hit scale, there will be structural defensive, either because of network effects or because of something you're building on the technology front, which is a core platform infrastructure. So that makes my job easier also because there are very, very few ideas which could actually be unbounded if they work out. But I try to just focus on them.
What do you mean by unbounded? When every venture you evaluate, I'm sure you're able to somehow put a market size if you had to. But when you
Yeah.
think about unbounded, what does it really mean?
So, like, that is obviously true. And of course, things can compound over time. But there are certain businesses which, by design, at least I think, will become stronger and grow more powerful, and their TAMs will never end, which, let's say, platform businesses, right? Even if, let's say, at the seed stage when we are investing in a tool, but at least in our memo, we are writing how it becomes a platform. So, platform businesses, like classic examples are databases or anything on the compute cloud layer. That could be one example. In the consumer side, anything with network effects like marketplaces, those could be those platform businesses. If it's even, let's say, in the new AI world, there are a lot of services, outcome as a service kind of companies coming up. And again, I feel there are very few ideas which could actually have some platformization or productization. Even though the business model is services, I'm not interested in pure play services firms, because at the end of the day, some of these businesses, they'll have certain laws of physics which will at certain scale start slowing down growth, right? Because if you're doing sales one by one, there are only so many accounts you can sell into, and things like that start coming into the picture, right? And there could be geography or industry-wise specialization, and so on. Versus if you have certain kind of centralization of product, which is enabling more and more people to build on top of you, then that could be an unbounded market, right? And we are seeing the example with your frontier model labs, even though they take a lot of capex upfront. So many venture funds, including us also in the beginning, were not sure of that. But it's definitely coming out that some of these companies are becoming platforms of the future. At least I feel that this is not near the end. This is more near the beginning. So there'll be more such opportunities the next 10 years. So that's what I try to focus on.
Got it. Got it. No, makes sense, and great to have you, great all of you here. I love podcasts and I've been listening to a lot. I think what I really enjoyed is just watching people disagree on something and debate. I was hoping I'll find some disagreements 20-25 minutes into it, but it's great to see already some points that I can double down. There's some points of agreements that, say, for example, non-linear, I don't think anybody would disagree that we all look for non-linearity. For like it could be tech-driven non-linearity, and Shubham, it could be once you find great market sizes, then going and figuring out is a tech founder, whatever else. But I'm just curious to know on that one bit to everyone that when you're first looking at opportunities, screening through that and figuring out where to spend time, both with founders and both with what markets to learn and what market not to spend time. The TAM question has been interesting, right? I mean, it's exciting to say that I've heard both arguments. Like Zepto is a classic example of nobody was able to put a number to it initially. People have did market research, spoke to consumers. Even consumers didn't appreciate on their own need, or they didn't understand how much they themselves would pay for it. But on the other hand, those tens and thousands of startups which died because you underestimated, you didn't even see the market size existed or not. So there was not big of a market. So I'm just curious, Sai, for you, when you think of non-linearity and when you said you don't look at market sizes as much, many more. Maybe you could start from there in terms of any examples of you thought on paper the market sizes is less, but you still think there's a non-linearity and you're able to build conviction around that.
I think maybe I'll try to answer it in two ways, right? Why do I believe market sizes don't matter as much? And then I can share a couple examples. Cost of starting up's only gone one direction. We didn't think there'll be large brands doing in certain consumption categories, but there's brands getting to hundreds of crores just on quick commerce rails today, right? Like that market now exists, which didn't exist a few years ago. As in, be it vibe coding, be it how much abstraction technology is done on so many levels. Like shipping is now so much easier. It wasn't the case a few years ago. And hence, I think entrepreneurs just can start and serve markets which may look tiny today, but as you start delivering value, more and more people or more and more spends may gravitate towards the problem you're solving. And that could lead to an outcome which is large enough. Now, the question on whether that's the right outcome for a fund, of course, depends on the size of the fund, their own fund construction, which is a different question. But I do genuinely believe large outcomes, which is at least, say, 5,000 crores in market cap, can come through across all markets. And maybe there's a timing issue on whether those foundational blocks exist today, but a lot of that's just getting solved for. And in the next few years, with all the innovation happening on the physical AI side, the cost of hardware going again only in one direction, the compute costs continuing to reduce, the tokens cost continuing to reduce. I just generally believe we will start seeing entrepreneurs serve markets which we would have thought 5 years ago were super tiny to begin with, which may not be the case tomorrow. Specifically within our portfolio as a firm, the firm through our US group is invested in a lot of very niche vertical SMB software businesses. There's a company which only sells to photographers, started off with one product, is now moving into the second and the third product. With just the first product, they were able to get to a 9-digit ARR. I'd assume we would have maybe 25 companies in India over that 9-digit ARR mark. And we have a company in the US which is serving photographers everywhere across the globe. In fact, the wedding photographer uses them, and I did not know that. That's the software used to deliver images to the clients by the photographers. And yeah, that looks like a problem Google Drive could do or any of the other storage businesses could do, but it wasn't solved for the workflow he was looking for, right? So, which is why I continue to believe market sizing as in it's important, but there's so much we don't know about consumer behavior that I, at least for me, in my mental model, deprioritize it a lot, perhaps also because I might not be the best at sizing these markets. So just playing to my strengths.
Got it. Got it. No, that makes total sense. And on that note, given how you guys are thinking, let's talk a little bit about what you're seeing globally and where India is. So, if you look at globally what startups are breaking out, you see a lot of activity in prosumer startups. There's a bunch for services for AI. I mean, Murkor might fall in that category, and others, which is servicing the AI labs or building tools for AI services. Just curious to know how you're thinking about where India's leverage really likes. I see a lot of talk about IT services. Like talked about a little bit on why he believes or not. But I'm just curious about, from seeing the global landscape, what was your thought process on where India can truly have leverage in AI, and where are you spending time on?
So I think, of course, there are lots of opportunities for India to build large AI outcomes, is our belief, firm belief. And I think my belief is also comes from the fact that, yes, I don't think India will make an OpenAI equivalent or a Anthropic equivalent. I think we don't have the R&D, we don't have the budget for doing that. But what we are very good at is actually making things work, right? IT services is a great example of actually leveraging technology which others created, but making it work for the enterprise ecosystem and delivering very high value outcomes. And, there are large outcomes created there. And I think for, let's say enterprises to adopt AI, you will probably need those specialized services. Of course, you'll need people to actually who understand AI and make things work according to your business process. And that knowledge we already have. So I think back office operations, automations, using AI is something which India could really, actually provide a lot of value and at a much faster speed than what traditionally IT services done, right? And I think that's a big value unlock for us. Of course, as we all know, voice AI in India is all the rage today. Almost every company is solving for voice. But I think it's a fundamental reason, right? That like if you think about how we communicate, right? A lot of it is voice, right? Whether it be meetings, whether it be talking to friends, whether it be talking to employees or anyone else, right? And can AI take away things where you don't need to be there, right? I think that's where maybe the hype is coming from, and that's where the applications and new applications coming from. And for example, things which you never knew could which you never thought about doing. For example, there are now voice AI solving for farmers outreach and understanding whether farmers have sowed the right seed or not, right? That is something which human calling could not have scaled in India, for example, right? But that now voice AI can scale that, right? And I think voice AI will be a lot of greenfield TAM which we can't even imagine. There will be use cases which we have never imagined, right? So I think and of course we have 1.4 billion people and rising. So catering to that mass audience using voice AI could be a very large opportunity for India in general, and that's a very large domestic market. You don't even need to go abroad for serving that use case. But apart from that, of course, I think, I think AI will come into very different parts of things. Like, there's of course vibe coding tools which come into play. But, I think there, like who wins is not clear. But having said that, of course, India has a large engineering talent pool, which probably understand, like what to build and how to build. Now their job is getting easier. So can they launch more and more innovative products on that so as to make their own life easy? That's another thing which I think we're still excited about. But yeah, I think those are broadly in my
Just a couple of double clicks on that, Shubham and Sai, and please really jump in. So I think two things that you said on large engineering pool and the voice AI definitely is a nuance for India, right? Nobody can from the globe build the kind of languages and nuances that we have. So the voice AI is largely India to India. Most of the opportunities are selling to BFSI right now. But are you also betting or thinking about from India to the world kind of opportunities where people can build and go and build large voice AI use cases within that market?
I think that opportunity exists, but I feel a lot of it is already captured by other companies. Like 11 Labs is, of course, as we all know, about 330 million ARR, solving for so many other languages, English, Spanish, French. It's not like limited to English per se, right? I think there's, of course, Sierra, Decagons of the world who have raised a lot of capital and using voice AI as a medium. So my point being that I think, yes, India can build for itself and can build globally as well. But I think in the global landscape, there'll be a lot more challenge. So, and that's why I think a lot of voice AI companies in India are today majority focused on India, BFSI. You're right, BFSI, but I think others will also adopt. Of course, BFSI is probably the largest user of human agents for BPOs, calls, etc. So that's the first one to like really adopt voice AI and start.
Yeah, sure. Yeah. I think there are places where or areas, obvious areas where we don't have an advantage, but not to say that we are necessarily disadvantaged, right? And I often look at the examples that have come from Europe, right? For example, 11 Labs is from Europe, Lovable is from Europe, Anagh is from Europe. We don't have as many success stories yet from India. So this is not sure how different basically the ecosystem is for Bangalore versus even a Stockholm, right? Versus Bay Area. Just the difference is so much. So things are happening in other places of the world. It just pains me sometimes that we are not seeing that yet. But hopeful that it will happen soon from India. So there are some of these global categories where again not given up, hopeful, and I think some of our companies are now coming to that stage. And maybe we also saw in the news some Indian companies have hit 100 million ARR. There are a few in our portfolio also who have hit or in that zone now. So I'm hopeful that some of these will happen. It will inspire the next generation. So I don't think we should stop doing that. But there are certain areas where there's a natural advantage of building from India. And I think huge shift which is happening globally, and even Wall Street finally acknowledges it, is a shift from seat-based pricing to outcome-based pricing in the enterprise. That this is a huge business model shift that's unfolding as we see. And here India has a natural advantage because as Shubham was talking about it, we have been doing it for several decades now, right? That India has the muscle and the mindset that it will be an end-to-end solutioning shop in a way, the company that I'm building, and not a tool for you to use. And if that shift is real, increasingly seems like it is, then India should have a natural advantage to build some of the world's largest companies in enterprise software. And this will be a mix of services and product. I think over time that distinction will matter less and less because a lot of that services is being done by AI agents now, right? And humans are more like monitoring. Right? But it's still services because you're getting the job done in a custom fashion. Right? So your margins might still look good and the profile of the company might look similar to a product company, but actually the company might be doing services. And there India has an advantage. This is before the rest of the world also catches up, by the way. I think the shift is still there. I see the mindset difference is there between Valley founders and India founders. So it's high time that Indian founders capitalize as a VC ecosystem in India also double down on this, that we are creating some global world class uh, case studies here for others to follow and that flywheel gets started. So this is our opportunity to miss. I have to put that way. And the second is consumer focus applications, AI native consumer apps for India, because two reasons why it could be interesting. One is Indian consumer side is very different from the US market. And when I'm saying global, I'm typically referring to the US because that's where most of the action is. US consumer is again quite different from India. Consumer needs are very different. Largest consumer tech companies are US companies, but they have so much on their plate right now that India will, of course, always be second, third priority. So that means that you can create some craft, some experience native to India, solve for Indian use cases in the consumer AI space, and create some good companies there as well. So these are the two areas where I feel there's natural advantage if you're building here.
Sorry, Anik, just a quick question on that tech services bit or the end-to-end solutioning bit. So, fundamentally, the largest thesis has been that, most of companies from other region would be a tool that, as you said, might solve for one point use case, but India has a large tech services landscape that can build an end-to-end tool. But I've been just curious to know, how do you think about that? As you said, there's a mix of services and product. you see product, which is companies which has like an account manager, which is very hands-on with you, but operating at a 70-80% gross margin as well. And you see productized companies, especially in voice AI, which is operating at very much services like gross margin as well, right? So is gross margin a good metric to think about that, or the other way is to think about the way you talked about that you need one person to go and sell, the sales cycles are long, so it's very behaving like a services company where you take 6 months to sell to one guy, then you're going in hands on to help them build that. So the growth will anyways be slow. So I'm just curious on how, when you meet companies in that space where they are doing an end-to-end solutioning, how do you divide and say, here I'll spend time versus this is not as interesting to spend time on?
Yeah, I think gross margin more than anything is just a reflection of the competition in the category, right? Even the most technically advanced companies in the world right now, OpenAI, Anthropic, with the best, of course, the best tech out there, they are also not at great margins right now because whatever they are building is getting fast copied, right, by each other or by open source labs and so on. So it's a lower gross margins typically will indicate higher competition, that more people can do the same thing. So even within services or the outcome as a service model, there are areas where you can have high margins because of the specialization that you have, especially for enterprises where the need for reliability is very high. Imagine cybersecurity services, right? Or high stakes strategy consulting or investment banking advisory and things and services like that, or even tax advisory for businesses. Some of these services will naturally have high gross margins because of the nature of the job that we are doing. And those I feel are a little bit more interesting than the others. There'll be lesser number of people going for those markets. You can create a brand over time. So your brand is not that I can hire like 500 people the fastest. Again, you can swap it with agents now, that I can build agents with Claude the fastest, because that will start looking increasingly shallow as a differentiator. But the fact that I've delivered this platinum grade enterprise solution for 6 other Fortune 100s, you're the seventh that I'm speaking with. This is the suite of services that I come with, right? So over time, you create a brand, right? And Parented is the best example for that. Of course, they have great technology and platform, but more than that, at least I feel they have the best brand when it comes to very high stakes, large contracts from the government, Department of Defense, large enterprise, and so on. And those, and you see them in the multiples, even among like the bloodbath which is going on in the software space right now. Parental still trades at huge premiums. So there are more and more companies in our portfolio also that I'm looking to like drive towards getting inspiration from Parental. And that area is something which India has a natural edge in.
I know we spent a lot of time talking about India and how we're different from the US. I spend some time every year in Hong Kong, and as in that gives me some visibility into the China ecosystem. The way I see the market is, of course, US has tremendous amounts of capital. We all know all the innovation happening in the frontier labs. India has a lot of knowledge workers. What China has historically always excelled in is industrial deployment, and I think there's a lot of work happening in China on physical AI, which is also now percolating everywhere else. There's AI adoption in manufacturing, logistics, robotics, industrial inspection. Both Subham and Anagh have spoken about just services spend, or the TAM of the salary spend being addressed by different businesses. A couple themes I'm very keen on is one, vertical AI for SMBs. Find super small niche verticals, could be HVAC companies, could be single specialty clinics in some parts of India or Asia or the US, and just build a full suite of solutions for them. And maybe over there, voice AI is one of the features, and the whole company is not a voice AI company. Like I tend to look at these more as technologies, and we would see voice AI get adoption across all software businesses. It's just a great way to reach out to people at a much lower cost. But the other theme I'm very excited about is physical AI, and especially the data layer. Saurav, you were speaking about the services for AI, the Mercors and the scale AIs. We don't have any data on how a doctor does surgeries, right? Like, how would we tell a set of robots to perform the surgery if we don't have any data? And over there, I think India, with our demographic dividend, and being the largest consumer base for a lot of these large labs, has an edge. ChatGPT Go costs $3.99 a month, I think. So that's little over $4. We've all seen what UPI autopay has done. So I do genuinely think the Gen Zs and Gen Alpha builders will solve really interesting deep tech problems. And we in the millennials, I'm assuming all of us are millennials on this call, perhaps did not get as much access to information, even with the internet, as is possible today. And I'm just amazed at how smart the average 20-year-old builder I speak to is. And that's just continuing to increase. So I do genuinely think while capital capital is still continuing to increase towards this country, but we may see a lot more deep tech problems also be addressed and built for.
I think the common thing I would love to know what you're not spending time on, but the common theme that seems everybody is excited about some form on shape is AI powered services, right? I mean, Shubham talked about it in some sense, and end to end solutioning comes in that bucket. Just going deeper on that one bit, I think the way I think, for example, Besmer described, and we see companies in that bucket is one tech services for AI. So it'll be very similar to a Merck or Evals and Data and all the other buckets that you're working for AI labs. We see maybe early companies right now in that bucket. I don't know if you've seen anything in growth, the small and growing bucket of opportunity. Second is more AI enabled services, which we have did at Capria, which is more taking traditional services business, say teleradiology business, search engine business or any of that, using an AI product to double their gross margin to 60-70% or more. And I see a lot more. I think General Catalyst is doing a lot of roll ups and all within that segment. And the third is traditional tech service, but for AI. So, going and helping enterprises and others actually build AI use cases. Westwood does a lot of companies in that space. So just curious on how you see that entire, where do you see that non-linear opportunity, right? Two big concerns when I've been thinking about that bit. One has been about differentiability and mode in the segment, right? More or less, some people are building platforms and pricing and GTM, maybe the founder mode. But is there anything more that you see and you evaluate these companies in terms of mode? Second was to Anagh's point earlier on being large sales cycle. How do you think about that outbounded market, right? I'm sure there's a big opportunity coming our way, but when you think about the growth.
Sure. Yeah, I think Saurav, that's an excellent question. In areas where the structural defensibility is not clear, right? For example, roll-ups you mentioned, or you're doing tech services. Way to grow, the only way I've seen people succeeding is extreme execution, right? It's an obvious discovered space, and you're seeing this opportunity, right? For example, the typical accounting firm, you're buying 20, they want to double it, 60. It's a window of opportunity because over time, I think AI will be deflationary. At least I'm in that camp, and there will be deflation of these services across the board, and your margins are not structurally poised to be that high in the long run. But in the transition, there's enough opportunity to make a lot of money, right? And then, for example, even in accounting, you can build probably a new AI native accounting firm. You have to move at extreme velocity so that by the time the dust settles, let's say in 4 to 5 years, you are now a brand in this space, right? Like accounting in particular, I talk about because we have done one investment right there right now. So we've spent some time thinking about it. There are, so the four largest accounting firms in India are the big four. These are all American firms, right? And the number of CPAs in India is growing much faster than the number of CPAs in the US. So uh, it's just very disappointing or mind-boggling that with the best talent and the largest talent base in the world in this particular specialized sector, we don't have a single company that is even comparable to American firms. So that is an opportunity, which is a window of opportunity. 5 years, 7 years later, this opportunity won't exist because again, this will be very common. AI agents will be doing most of accounting, right? So you have to move at extreme velocity if you're getting into these spaces. So that is my answer to your question. I don't think there is much structural defensibility there.
That's the defensibility bit. And on that scaling and outboundedness of the market, right, in terms of sales cycle, how do you think about that bit? Just curious.
So by the time a company comes to actually growth stage, right? And I would love to hear what Shubham and Sai think, but the signals for PMF are actually very clear. It's not that hard. Maybe you need to spend 2 days in the data room of a company to figure out if they have undeniable PMF or not. And if a company has undeniable PMF, typically they don't have any scaling challenges with outbound GTM because their leads to bookings is growing, their bookings to going live is shortening over time. So there are some of these forces of nature, right, which crop up by the time they hit Series A or B stage, where basically it becomes clear that they have figured out something on the GTM side. So I think it's more of a question in the for the early stage side of how to build the first few get the first few logos and so on. But I think for companies who don't have that, right, and who don't have undeniable PMF and they still have to think about scaling GTM, unfortunately, the market has come to a point. Again, this is my just observation, looking at how growth funds are investing, that it's quite brutal for those companies right now. There's not enough money. Probably there's no money right now in the market for companies who don't have undeniable PMF by the time they reach Series A B. So that's where the even like in terms of statistics, the number of venture deals actually has been going down since AI. But the amount has kept going up. Fewer companies raising more capital. So that's the reality. I don't think it will change also in the next few years. So you have to figure out undeniable PMF by the time you are hitting and going to speak with growth funds. And typically the best companies are we have seen excelling here. They are always planning months in advance. That they plan 6 months ahead. What is going to be my pipeline? How many sales reps I need? Markets are moving fast, right? And you can't leave things to luck, right? So they are actually following classic playbooks as of today for enterprise sales.
Got it. Got it. I know, Sai, you just did a seed round in one of the AI-enabled services companies, but just curious on the larger landscape. You talked about vertical SaaS for SMBs, but how do you split that entire segment, and why did you go, specifically behind vertical SaaS for SMBs? What are the non-linear advantages and one bit? And do you see within the segment, do you see value acquiring any other pockets?
So, as in, we all know that there's very limited moats in the current times, right? Like what we thought were moats, what would take 12 months to build is now much happening in a much shorter span of time. We think product shipping and GTM are the only two, as in it's GTM velocity and product shipping velocity is what you need to solve for to win. And within SMBs, it's a slightly different business than the enterprise business, right? Like in SMBs, if you build for a customer and if you know and sharpen your ICP, just velocity at which you scale. HubSpot's a great business. It was a tool. If you actually do the set of actions people using HubSpot were doing on the S&M sales and marketing side, that's a much larger TAM than what HubSpot was solving. Slice it and serve 5 verticals. That's the TAM, say, this company you're referring to is focused on. On the enterprise side, as an I'd echo Anagh's point on just solving for delivery, doing it exactly like how the enterprise would want. There's increasingly a lot more open source model adoption within enterprises for various reasons. And just delivery, right? Like you can't just be a simple RAG model. You have to replace, like in our case, if we were a buyer of software, I would want the IC memo exactly like how I write it, or Anagh would want it exactly like how he writes it. And Subham similarly. So unless the system does that, the threat of it getting displaced is very high. And that's the moat in some sense, right? Because you know so much about the end customer that it becomes very hard to replace. There'll always be competition. There'll be 10 other players who will come tomorrow, will do the exact same thing you're doing, and everyone will be a fast follower. So feature parity will come through in a quarter or two in most software segments. So and hence like people need to find unique ways to one, capture data from the customer and create a data flywheel, which is the only way to stay relevant and solve your gross churn problem, right? And then any business will figure out the classic software playbook of building new products and solving the net retention problem. So we care a lot about gross churn more than net retention in the early growth bucket. And that means you need to know who your ICP is, sharpen the ICP definition, continue to build on what the customer really wants. And as long as you're doing 1 and 2, why would a customer really churn away, right? Unless there is a player who's significantly subsidized the service for customers to move to the alternate offering. So that's how I would ask founders to also think about their businesses.
Got it. No, that's super helpful. Shubham, any thoughts on that bit?
No, I think I resonate both with Sai and Anagh a lot. I think how I think about it is that solving the most complex problems of the enterprise will build a lot of moat for you. Because once you solve the most complex problem for the business, you get the highest context possible, right? And context is the buzzword today. So you get the highest context possible of the enterprise, and then you become almost irreplaceable, right? Because I don't think people have figured out how to transfer context from one model to the other, one vendor to the other, right? So the more context you can capture out of that enterprise, the more harder it becomes to replace you, because now you have learned over that data. And as I was talking about, the data flywheel then comes into the picture, that you have learned on the previous data. So any new data which comes, you can then learn on it and improve your outcomes, as as Anagh talked about, even better and better and better. So I think that's where I think solving the most complex problems will give you the highest moat. But solving complex problems is tough, right? And that brings the whole delivery problem, that basically that you have to have specialized people who understand that industry or that type of business, and can like more consulting led sales, right? Which of course, I think India is very good at because of the IT service background.
Got it. Got it. No, super helpful, guys. I think before we jump into advice for founders and talk about some specific examples on that bucket, I just want to double down on one key aspect, which is, let's say, the global deals landscape and the Indian deals landscape right now. Every VC loves a company which gets to $100 million in 2-3 years or less. And you see in US or the global markets, at least in my understanding, has been brought to markets. I would love to know, Sai, what you're seeing in China, and if there's any other markets that you see in the US or others. One was prosumer, and probably the reason why they are scaling very fast has been the end user is adapting pretty quickly. The gratification is pretty instant when they see what's happening. I can't think of better reasons on the prosumer side. So you see cursor, vibe coding, photo generation, all the other buckets there. And then you have AI services and companies like Merck, or Sai also talked about, physical and data. And the core reason is the customer is so damn willing to buy. There's so much money to spend that most of these companies would have 50% or more revenue coming from auto companies, right? Is there any other deal space that you've seen where rapid growth has happened globally? I don't know if robotics is one. Is there anything in China side that you've seen? Before we come to India and talk about what you've seen in India, I'm sure there'll be some themes in consumer, but anything on the enterprise side apart from these two themes?
I'd assume Harvey Glean are over 100 in ARR. All
Right.
the model companies at 11, I think Subham mentioned, was over 300. There's a lot of inference spend businesses with hyperscaled fireworks, gather AI. There's a few more.
Would that be similar in China as well, Sai? What have you seen in Shenzhen? Is there any other buckets? Would robotics and physical AI really talk about?
I think there's a lot more fragmentation in the East than there is in the West on how spends are. So there's a lot more long tail of data labeling businesses or services for AI. There's also fragmentation on how many model companies exist in the East, right? Like we all read the news on the Quen models last week. ByteDance has its own models on the Cdance side. There's Tencent, there's Minimax, there's DeepSeek. There's maybe at least 10 names I can think of which is the capital and the talent, and more importantly, the compute um, to be able to just continue to build. So I think the market in the East is a little more fragmented than the market in the West, where we largely think of 3 or 4 names. But it's also a little more insulated, right? So it's largely served one country. So the TAM naturally will be slightly different.
Got it.
But like just one example there, we're investors in a company called Hicksfield.
Okay.
A lot of the team actually is in Central Asia. It's not like an Asian company; it's an American company. But a lot of the team and the R&D happens in Central Asia. Right? Those guys have just skyrocketed on the revenue side. And I think in consumers, more such things will come. Maybe Sai will know this better.
Wait, what do Exafield does exactly?
Hicksfield helps create videos with AI, which is what every creator wants. Like I think we are heading towards a world where 99% or more of videos on the internet will be AI generated, right? And it gives the tools to use AI models to deploy them at scale. So that company is growing very fast. I saw in China, Ant Group has launched a healthcare app called Antafu, which is I think 40 million or 30 million plus, at least 30 million MAUs within 6 to 8 months of launching. So on the end, in the early days, various reasons why character is not popular today, but character AI was one of the early breakout traction companies in consumer. So I think consumer gives that other. So I'm talking specifically about consumer, not more prosumer, the cursors and others that we talked about. I continue to be bullish about that opportunity. These companies can come from nowhere and surprise all of us. So I'm trying to keep an eye out for them.
Got it. Got it. So coming to the last segment of the podcast and the most important segment on advice to founders, I'll quickly summarize what we discussed and then we'll get to advice to founders on that bit. So I think those three interesting things of India leverage. One was the talent base. Shubham's point on engineering talent, or on your point on accounting talent. That we have large amount of talent that could actually solve end to end. The second was nuances. On the consumer side, you go in and build nuances for the specific segment, or on the voice side for BFSI and so on and so forth. So either you're building consumer company very specific to Indian nuances and maybe then thinking of global and so on and so forth, or you're building on the enterprise side of things. You have a large engineering talent pool, accounting, large bunch of those use cases, right? So one is when you talk to growth investors, kind of laying out your point on an undeniable PMF, and then what is your non-linear advantage to go forward and win large outcomes. So I'm curious to know two things for a founder listening to this. One, when do they, now we see a lot more growth stage investors chatting to founders on seed stage and series A stage and more, right? Like everybody's coming down and chatting with people quite early on. So one is, when do they engage? I mean, you just raised a seed round, probably a really good seed round that you don't have to worry about cash for the next 12 months or maybe 3 years or more, or a pre-series A round. When do you engage when investors reach out? Number one. When do you, I mean, to your point, I'm sure most people think about reaching out 6 months prior to their raise or maybe 3 months prior to their raise. But how do you think about keeping them engaged? Do you have to be building relationships quite early on, or is it good that you build your business, focus on building, as you talked about, and TMF, and then when the time corrects, your own seed investors will just connect you to the largest names and you close in within weeks. How do you guys see that? Or what's your advice to the founders and how should think about it?
I think it's a tricky question, Saurav, in my personal opinion. I think a lot depends on how the company is scaling and how much money does it need, right? Like if a company is in super hyper growth phase, and that hyper growth is coming at the cost, right? At a certain cost, then sure, you should always be on fundraise mode. Like every 3 to 6 months, you kind of fundraise, right? Like if you look at OpenAI's history, Anthropic's history, right? They're fundraised at a very, very fast velocity. 11 Labs, for example. Any of these hyper growth companies, they are fundraised at a very, very high velocity, which has never been in the past of any company, right? Whether it be consumer, whether it be software, right? And the reason is that they need that money because they are right now burning a lot to kind of like reach to a certain scale and establish that moat and brand, as we have talked about in this whole podcast. So I think that is something which, so therefore kind of depends, the consulting answer, like it depends. So a lot depends on where the company
Well,
is.
maybe I'll lay out a little bit more context on that. So let's say that I am a founder, as I said, raise some money. Now the overwhelming advice I'm receiving is don't talk to investors, right? Like just build your business, and when it's time, you go present the deck and talk about the numbers, and the round will happen in a couple of weeks. But there's an intuitive feeling in my head that it's always best to build relationships quite early on. That lot of the jump of faith that you'll have to take happens on that relationships or having known somebody for a period of time. And I'm sure no matter how fast you're growing or what kind of numbers you have, there's always something that worries you when you're making a large investment, right? It could be defensibility, it could be something else. There'll be some question that we view where we will have to take a leap of faith. So does it help to have your top P0, top 4, 5 investors sorted out and say, I'll talk to this guys, build a relationship. Maybe I don't have to go to fundraising mode. So I'm not talking about numbers and depth, but keeping them posted, getting to know them personally in some form and shape, so that when I raise, there's some trust already built in. I've known this guy for the past 24 months and he's been, or 12 months or whatever, and been beating projections every now and then. Or the risk I run by doing that is I've been talking to 4 people, they know me, and they're just not excited. I mean, I don't know the right term, but they have looked at the model. I was not in the undeniable PMF bucket back then. So does it even make sense to talk right now? I should have everything sorted out before I start talking to these people. There's always that push and pull of.
Yeah. No, I think it's a good question, Laura. And I think it's my answer still remains that it's tricky because even at Series A, B stage, right? Unless, as Anagh talked, you have an undeniable PMF, then of course the Series A, B investor is like, okay, no matter what, I will put money in that particular company whenever they're looking to raise, right? And you have clear signals there, right? But as a founder, everyone believes that they have undeniable PMF, right? I think, or a vast majority do feel that, right? So,
Yeah.
I mean, but as an investor, if you feel that, okay, they are not at that scale, and I think right now VCs have a problem of plenty, right? There are so many different companies doing so many exciting things. It's very hard for us to prioritize. I don't know how Anand's I feel about it, but it's so hard to prioritize, right? Because unlike the dot-com bubble in the AI, let's say, era, everyone is getting scale. Everyone has actual revenues. It's not eyeballs which are getting counted, but actual money dollar coming into the company. So how do you like really differentiate between a company A, which is, let's say, maybe at 7 million, the other company at 10 million. But that 7 could maybe next year become a 20 and that 10 might still be a 15, right? So in your mind that, oh, this 10 million is faster, this is start at the same time, is faster. The 7 million company finds like higher growth, the product. So it's very hard. Right? So I think I would say that building early relationships and like coming to a conclusion, being like a more solid thing is that my advice to founders would be that, of course, for your P0, P1 investors, whoever you feel that are important to be on your cap table eventually, you should maybe add them to your newsletter updates or something like that, which you can share broadly with them so that they are aware of what's happening. Have an initial conversation. And I think the second thing which I think a lot of founders are doing is that get customer introductions via that, you know, that VC, right? Because a lot of their portfolios might be applicable customers to them. And, we are happy to, always connect with people, connect to customers, and that gives VCs in general like a good way to actually do ref checks on the product, checks on on the sales cycle, on the founder. It makes our job easier, to be honest. Like, we already know that what's our strengths and weaknesses of the company. So I would say that's my advice to your founders. But if you are still not very clear on the business and you're still like still worrying about, okay, have you not solved for a lot of different things in the business, whether it be product, whether it be GTM, whether it be team hiring, then just focus on the business, because investor conversations take a lot of your mental bandwidth. Because if you really like the company, we'll chase after them and we'll be like, hey, I want to talk to you again, I want the data, I want that data, and that takes a lot of your energy and bandwidth. So I think having it, but serious conversations only when you are going to raise in the next 3 months, 5 months.
Also, Shubham, when I would also say, what is the right time for founders to reach out to you that you will be more likely to take a chat, right? So for Shubham, is there a, I don't know, revenue metric or Series A or whatever? Is there something where the founder should feel like, now I'm ready, if I want to just reach out and chat or, raise, what is the right time for a founder to reach out to you guys?
I think two things for me is that if the founder is at $1 million ARR or close to it, and maybe reaching $1 million ARR in, let's say, 1 or 2 months, I think that's one metric. And if you're looking to raise anything above $10 million, right? So I think that's the right time to like reach out and talk to me and hopefully become the partner and have a good success story together.
Yeah, awesome.
I'm assuming the question is for entrepreneurs who need venture capital, right? Like, because there's a lot of entrepreneurs increasingly I come across who operate at 30, 40% EBITDA margins, are running a very nice business, really don't need any primary capital. I think for us to answer the second question first, Saurav, we care a lot more about velocity. So if a company is, say, adding $500,000 or even for every quarter, it becomes an interesting stage for us to start spending time. I might have a slightly unpopular opinion, but time is finite. As in, I'd encourage founders to only speak to investors if there's a need to speak to them. We all are very intellectually curious people and we love meeting entrepreneurs, but they have a very finite amount of time and there's so much happening that unless they need to raise in the next 3-6 months, like what Shubham said, or I think in select cases, you need to constantly raise because you just have such large spends needed to lock in compute 12 months ahead of when you need it and so on. Maybe in those cases, you're always fundraising. But yes, and as long as the companies continue to serve their customers, investors, and the dry powder that's available in the country is a lot more than it was ever before. Even if there's multiple companies who've raised in the same segment, a Series A, Series B, still a very high likelihood of the next company raising money, which was not possible before. I don't think there's any scarcity of capital anymore, which serves entrepreneurs really well. If there's ways the entrepreneur could benefit from the investor through their existing portfolio, that's definitely a way to reach out. Susquehanna is also a very large financial services firm, so we tend to work with companies where we could be a buyer of software ourselves. And there are certain segments where we end up spending a lot more time as an economic buyer. So those are cases where we do end up meeting entrepreneurs early, but otherwise only when they're raising is when it's the most ideal, I guess, for them to spend time. Notwithstanding the fact that I'd always like to meet entrepreneurs early and build that relationship.
Yeah, got it.
Yeah. So I think sort of your question has a lot of cyclicality to it. And maybe what I'm talking about right now, what we are talking about right now, might not be that relevant 6 months from now. So I think for growth stage fundraising in particular, there's a lot of cyclicality to how things happen. I'll tell you my version of what I'm seeing right now. There is a lot of capital in AI, but it's not equally distributed at all. Right? It's dominated. I don't know much about China, but outside of China, it's dominated in the Bay Area. And either you are a Bay Area native startup or you're not. Just I think even I've seen so many founders moving there also and trying to be in that ecosystem, but doesn't happen by just a physical movement, right? You need to have those customers who are Bay Area darlings. You need to have some investors on the cap table who can make connects in the future and so on. You need to have employees.
So
Yeah.
I just add on question to that because it's very important. On that, being a Bay Area company is more about not just registering and having customers, but to your point, really building that trust with Bay Area that this is actually one among us. For example, Z47 had put out a case study on atomic raising and what he did, traveling and building relationships quite early on with growth investors. And their entire point with that blog was this guy was meeting investors even after his raise to understand what they're thinking, way
Yeah.
before and traveling so on and so forth, building that
Yes.
trust early on
Yeah.
and giving a feeling that I'm not an outsider and you don't have to worry
Yeah.
about it. I'm building that, but maybe that's not the case for as you said, for some folks, right?
Yes. Yeah. Yeah. It's very hard to do actually, because there's no dearth of companies. If we are not seeing a dearth of companies here, it's 100x worse situation there,
Yes.
right? And uh, when I see, let's say, a top tier fund at the growth stage, they're getting multiple pitch decks a week, which are growing 4 to 5x year on year with healthy margins in the single digit or double digit, early double digit ARR. They are looking to raise good Series A's, B's. And within that, you have to get plugged in, right? Get noticed that, first of all, outside Bay Area is a stretch for many Bay Area funds, right? And then outside the country is the largest stretch. That's what the reality of the market is, at least what I'm witnessing. So that is one. So that what that means is, let's say you're building for consumer for India, or there's a lot of India angle to what you're doing. There are very select funds in India actually, which can write growth checks. So there are 5 to 10 funds, maybe a few more, but you can actually count them on your fingers of who can write a 20 million plus check today. So it's quite important to know what their thesis areas are, right? How Shubham and Sai are thinking, for example, right? Because between this on this call, it's probably 20-30% of right now growth capital which is available to AI in India. So it's very important to know how they are thinking, have relationships in those funds, and basically strike deals with people who think a lot like you and who can have skin in the game. And how to test for that is, uh, when you talk to growth stage funds, you ask them for specific help, let's say a portfolio introduction or some hire and so on. And everyone says they are very, very value additive. We love you. We love this space. So we'll definitely help you. But that becomes the first litmus test, right? If they don't come back with something tangible, actionable, most probably they're not interested. Either they're not interested or they're not that value add. So both these cases, then you have the answer clear, right? That becomes kind of a test. If someone is genuinely helping along the way, then they have some skin in the game with you, and they will probably be interested once you're raising, and it will happen. So that is one reason to talk to growth stage funds. But so that would mean that, let's say, if you're raising in India, these few funds that we all know, I don't need to name them, you select within them that who are you going to have good relationships with, and just develop that. I think that is important in today's environment. It's not easy to raise right now, right? Because just because of the structure we are in, I see a huge gap. I love Accel. I have no plans to leave, but if I were to start a new fund, then I would probably start a fund in the Series B, C stage in India. I see a huge gap right now.
Sorry, Anagh, I really wanted to let you go, but on that note, just one more question before
Yeah.
I guys let you go. I was just listening to the head of A16Z Growth saying that for 2 years they were tracking a company, made so much introduction, so much work, and finally he called up to say there's the right time to build. And the entire point of view that he was building was, at least in the US, you see some breakout companies that everybody want to work with. You have some sense that this is top tier management team, built and scale ventures before, really want to get in. So you really try hard to get to those companies and build a relationship as an investor quite early on before they raise. So there's one set of companies which all growth investors know, or at least presume that amazing management team looks like great. How do I get into that? So a lot about getting into those companies become important. The second is kind of proprietary or preemption in some form and shape, that you are reaching out to people, management teams which are not so known, but you have some viewpoint there and you're kind of preempting the round before they get to market and raising it from there. So when you think about how the growth stage investing is evolving in India from now and going forward, what is the true leverage for a fund as well as an investor, right? Is it the ability to actually be investing to this founders and build a relationship early on so that they call you up before they call up anyone else for their growth round and you have the view, or you're able to preempt and close that round before they go to market? Or is it anything more? Like, I don't know, you have a.
Again, I think sort of if I can go first on this question, again, very cyclical. As of now, I think it's really easy to win deals in India as a growth stage investor because there are not many funds chasing post PMF companies. If you have a point of view on a certain space and you have decent relationships with the founders of all those spaces, you can have some view on who is the best founder among them. And if you're bullish on that space, very easy to preempt the rounds. So it's not like 100 funds are chasing Indian companies, right? So if you offer a decent enough valuation, then it will be actually not that hard to get into the right company is what I feel. Like I don't have much experience of series B and beyond, but at least in series A's, even 10-15 mil kind of checks, it's not like winnability has not been a challenge in the last few months. Because once you start seeing, and signs of PMF are clear, not just from the pitch deck, but
I think slight point on that is winnability has not been a challenge if you have an opportunity to see that round. But if somebody's preempting and already kind of doing that round in some form and shape, I
but
can
Saurav,
take
I think in growth stage,
like
opportunity to see that round is also not that important because if you know the space, right, then you know who, like, let's say it's an enterprise company, right?
yeah.
You can just go to their website, look at the logos, and just go and talk to those customers. How did they decide on this company versus others? And then see if it's actually very strong because there are many companies out there who have put some logos because some innovation team did a demo sometime 12 months back. And 80% of the companies you realize the customer logos on the website, they don't even remember the vendor's name. So you narrow down the set pretty quickly. So that 20% company that you're working with, you kind of get an outside in perspective of how these companies are actually doing. So there are many ways to actually be pretty sharp about it. This little bit of course, hard work. I don't buy the point that you have to know a lot about the company before being able to make a move. I see so what happens, let's say when our companies are raising from the US tier one growth funds in particular, I see what they do really good, really well is they've done a lot of research even before the first call, right? So they come in with a point of view. They come with 2-3 pointed questions. If it fits, then they actually are able to move fast. And I think there's an opportunity to do that well in India right now, which is a gap.
That's actually a good segue into why I should also be employed in VC workflows, right? I've just been playing around on how much digital footprint exists of a company, which the founders also perhaps don't know of. Just go to archive.org, right? Like it's a gold mine of information. You would know whether the founder was really building what they said they were building 3 years ago, all the pivots that happened along the way, even before you meet the entrepreneur. Last calendar year, 6 deals. We are on track to do 6 this quarter. And that's a lot of work for a team, which is a really small team. And the only reason we've been able to do that is by embracing AI in our work a lot more aggressively. And we've not done anything.
So I said,
Really.
what are the key leverage? You said you meet 1,000 to 1,250 companies a year, and you're able to, I think, assume your team is 5-6 members. What are the key AI leverage here? One is a research front on getting a lot more company info before you meet. What are the other key AI leverage? I'm just curious.
I'd say it's largely on the decide phase, right? So it's not so much on the find. I think we all have to do the hard work on the find ourselves. There may be some AI and sourcing modules everyone talks about, but once I know I want to say spend time on a specific subsegment, say influence spends, the amount of time it took me to build out my thesis is shortened so significantly because there's research agents, there's a lot of knowledge which resides within the firm, which can be harnessed if you just dump everything you've known into a intelligent vector DB. And that's basically where we've gotten the most gains, right? Like what would take us 4 weeks to decide, can we decide it in 2 weeks? That's the main thing, which allows us to get to the answer faster and then move on to the next one. And that's again, as in all transparency, there's a lot more we want to do. And I'm sure Anagh and Subham and you much further ahead than where we are because we see much smaller volumes in the stages we play in. But I'd say that's the only way to compound, right? And I think A16Z has done they built a great product on even network mapping and making introductions, right? Which is all using a
Yes.
ton of AI to pattern match and help not just portfolio, but prospect. So we have a lot to learn as an ecosystem. And that will also answer your question on even if the volume scale, the system scales then along with it.
Shubham, any point of view from you before we close out?
No, I think similar to both, what Sai and Anagh are saying, I think, of course, AI into our own workflow has become more and more critical. I think to understand AI systems or AI companies, you also need to use AI to actually try out. And I feel like something which I really like, doing is that doing product demos, if possible, actually using their product. I think, of course, I don't think I'll ever be the ICP, but for that particular company, but at least it gives me a perspective, right? That it's like, how does it work? Right. And I think that's becoming, I think, more and more important to actually build your own view, because at least I can't keep up with how AI is progressing in today's day and age. I think every day there's a new model upgrade, there's a new tool out there, and there's a new way people are improving productivity. So using the tools actually gives me the best sense that does it actually improve my productivity? Does it actually work or not? Right. And of course, sometimes I just take a demo, but even that gives a lot of sense that what does it do exactly?
Got it. No, awesome. Thanks a lot for making the time, guys. This has been fantastic. I would have loved to spend a lot more time on a lot of things, but we're already over time. So thanks a lot for making the time. I hope this is useful for founders. And see you sometime soon in some other episode.
Thank you.
Thanks.